Welcome back. We've talked about how the money system can be corrected and can be changed to a debt-free money system basis, and how historically we've had experience with it. And I want to just talk for a minute here about the current situation we find ourselves in, especially in light of the financial crisis that we're in, but most notably what we can do about it, and that is the transition to debt-free money. The fact of the matter is that the Congress right now is struggling to deal with what are we going to do about this debt crisis that we have. They've created trillions of dollars of new money to try to keep us afloat, kind of keep us on life support, if you will. But none of that really represents a solution. And a lot of people are actually starting to realize that none of that really represents a solution. So what we have today is a look at what's going on in terms of the real solutions. Now, Congressman Dennis Kucinich has taken the first step to, that would lead to the establishment of a debt-free money system. Not introducing that legislation, but legislation that would call for a real audit of the Federal Reserve banking system. A real audit of the Federal Reserve. We've never had a real audit, and we need to have a real audit to find out what's going on with all the money that has been created. The Treasury has stepped out and created, trillions of dollars, including of off-balance sheet guarantees, and we don't really know how much there is. And if we're going to make a transition to any other money system, we really need to know what the structure is of this money system. So we start off needing an investigation and an audit of the Federal Reserve System. However, that only lays the groundwork for what can come with debt-free money. Now, Congressman Kucinich has stated his intention to put legislation forward that would mirror or mimic the proposals of the American Monetary Institute for reform of the monetary system. And the essence of the American Monetary Institute's proposals very much mirror the actions that were advocated in the Chicago Plan for Banking Reform. So we could say that they are, number one, the abolishment, if you will, of the present private banking system of the Federal Reserve. So there would not be a Federal Reserve, and its functions would be taken into the Treasury system. And then number two, the inability of any private bank, regardless of whether they were part of the Federal Reserve System or not, to create any money as a debt. And that would mean that the end of the debt money system. Number three, the implementation of a Treasury system of issue, and that Treasury system of issue would operate on the basis of the need for new money in that then current year. So in a way, it would be similar to the objectives of the present money system, in that we need new money to be created, and that money would be created by the Treasury in the proper amount, just like Benjamin Franklin told the Europeans, that in the proper amount, issued debt-free into existence, we now have provided the means of exchange in the economy. And those are really the essential elements of the debt-free money system. Now, in the proposals from the American Monetary Institute, we have further specificity with regard to what happens to the money. Because right now we just created something like a $780 billion stimulus program that I think is supposed to be implemented over 2 years. Well, that's great, because quite frankly, in a $13 trillion economy with rational growth, we're going to need approximately $350 billion of new money next year and the year after, etc. So how does that money come into existence? It comes into existence by the Treasury paying it. What's the Treasury going to pay it for? It's going to pay it for obligations of the federal government now and sharing in the obligations of the states. And I think this is a really important aspect of having a debt-free money system and a Treasury issue, most importantly, debt-free money system, that needs to be appreciated and understood. Under that system, the payments for the infrastructure improvements that have been identified as necessary would be made from those Treasury payments. So we take care of the infrastructure. The government pays for its mandates, an important aspect of what we could do with debt-free money. That is to say, health, by the way, an important aspect of our economy, having a healthy population. Education, another important aspect of our economy, where we provide, actually, the federal government provides a mandate that we will have an educated populace, and we would be able to fund the mandate for both health and education and welfare from a debt-free money, on the basis of debt-free money issue. Now, the amount of money, and I just mentioned $350 million as 1 year's worth, would be an amount of money that would be a reduction in the tax obligations of the citizenry. So right there we have, the equivalent of a tax reduction on the citizenry, and it will automatically happen at whatever point the Treasury ends up putting its money back into the system. So if it pays for Social Security, which I hope it does, that money would flow back into the system at the user level. And if you contrast that with the machinations of the Geithner and Obama and Summers plan for restoring economic activity, where they're trying to shove trillions now, really, of dollars down into the financial system with the hope that some way it will make its way down to the people and restore economic activity, which quite frankly is not working, and which quite frankly will not work, because it's the people that need the money and not the banks. We could see how a debt-free money system and the money system that's proposed by the American Monetary Institute would have a tremendous benefit on the economy of this country and on the people of this country. We would have the thing that I think we fought for the right to have, and that would be economic democracy in this country.